Hey everyone, and welcome to today's explainer from May 22, 2026. I am absolutely thrilled to have you here because, honestly, we are watching this market fundamentally transform right in front of us. We are finally moving past those exhausting, endless legislative debates that completely dominated the early part of the year. Instead, we're stepping into a totally brand new era. It's one that's going to be defined by massive retail entry points and a serious, hardcore push for true, sustainable value in decentralized finance. And really, this right here is the anchor for everything we're going to dive into today. Bitcoin is continuing to hold its absolutely crucial support right near that $78,000 mark. And you know what makes this so remarkable? It's the crazy complex global macro environment surrounding it right now. I mean, we've got geopolitical shifts happening, like the reopening of the Strait of Hormuz, which is thankfully easing some market fears, and shifting inflation narratives. Through it all, Bitcoin is proving its resilience. It's no longer just wildly reacting to every single headline, it's establishing a really firm baseline. But while the king of crypto holds the line, the genuinely fascinating story is happening just beneath the surface. And that is the $1,000,000, actually, scratch that, it's the $1,000,000,000,000 question. If Bitcoin is acting as this stable bedrock right now, what exactly is fueling the incredible momentum we're seeing across the broader digital asset space? To really get a handle on this, we have to kind of look away from the daily price charts for a minute and focus on the deep structural shifts happening in the market's actual plumbing. Because we are witnessing a complete regime shift in market psychology. The old narrative, it was entirely consumed by regulatory anxiety, the whole will the SEC crack down panic, and that was coupled with growth purely by wild speculation. But look at where we're heading today. Institutions are literally asking, how fast can we integrate these assets? And the market is straight up demanding sustainable value. We have officially entered what we're calling the retail and revenue regime. Okay, let's dive right into this. Part 1. Retail enters through Asia. So while Western markets are still out there untangling red tape, Asia is making some massive moves. Just let that number sink in for a second. 44 million. That is the size of the user ecosystem at Rakuten, which a lot of people call the Amazon of Japan. And Rakuten Wallet has just officially added XRP to its platform. Guys, this isn't some niche exchange adding a totally obscure token. This is one of the largest, most entrenched consumer ecosystems in the entire world, granting its massive user base direct, frictionless access to crypto. Market analysts are overwhelmingly calling this a game changer, and for very good reason. For a long time, assets like XRP have been somewhat range-bound, heavily correlated to whatever Bitcoin was doing. But getting integrated into a retail giant like Rakuten, that provides something absolutely critical, a massive new liquidity buffer. When you open the door to 44 million potential new buyers, you create the exact conditions an asset needs to finally decouple from Bitcoin and move based on its own specific utility and retail demand. Now, the crucial thing to understand here is why this specific integration matters so much in the broader context of global finance. Right now, traditional Japanese megabanks are aggressively resisting the adoption of non-bank stablecoins. Basically, they want to control the rails. So Rakuten's move to deeply integrate a digital asset like XRP provides this incredibly powerful retail counterweight to that institutional resistance. It proves that consumer demand for open, borderless digital assets is just way too big to be sidelined by traditional banking monopolies. All right, moving on to part 2, the pivot to sustainability. So that covers the retail side of the regime. Now let's look at the revenue. To understand this pivot, we need to look at 2 massive developments that dropped today. First up, Balancer, which is a major decentralized exchange, has proposed a move to zero emissions, and they're pairing it with a $3.6 million token buyback. Their role? To stop printing tokens and instead share actual protocol revenue with their liquidity providers. Second, the MEXC exchange just launched Futures Earn. This product lets institutional traders generate up to 15% yield on their idle cash balances while staying perfectly trade-ready. Both of these upgrades show an industry that is suddenly obsessed with capital efficiency. And this brilliantly illustrates the exact shift taking place across decentralized finance right now. The old DeFi model relied heavily on inflationary rewards, basically running the token money printers hot to pay users for their liquidity out of thin air. It was purely speculative, highly dilutive, and honestly not sustainable. But this new era, it's defined by zero emissions and real protocol revenue sharing. If a protocol isn't generating actual cash flow to pay its users these days, the market is simply moving on. Let's see how this builds in part 3, stablecoins and tokenized assets. This demand for efficiency is completely rewriting the rulebook for institutions, and the moves happening right now are just staggering.
Ondo Finance is actively petitioning the SEC for no action status. They're seeking legal clarity to directly integrate blockchain settlement right into traditional securities infrastructure. If they pull this off, it paves the way for 24/7 on-chain equity settlement. Think about that for a second. The stock market, but it literally never closes. At the exact same time, asset manager WisdomTree just forecast a massive structural repricing in the stablecoin market. They're arguing that traditional non-yield-bearing stablecoins are rapidly losing ground because institutional capital is aggressively shifting toward regulated, interest-paying tokenized alternatives. And the scale of this infrastructure rollout is truly global. On one end of the spectrum, you have a prominent economist formally proposing a national USD-pegged stablecoin for Venezuela to eliminate currency controls and bypass failing fiat. Digital assets are literally becoming safe passage through economic friction zones. Then, on the totally opposite end of the tech spectrum, Lava Network just launched a specialized RPC engine built specifically to scale stablecoin payments. Why? To support the mind-boggling $28 trillion agent economy. We are talking about reducing latency for high-frequency AI-driven transactions where autonomous bots are out there executing micropayments and stablecoins round the clock. It is wild.
Which brings us to our bottom line. Part 4, watch for altcoin rotation. So with retail pouring in from Asia, DeFi shifting to real revenue, and institutions laying down these 24/7 tokenized rails, this is the big question every single trader should be asking today. Is the altcoin rotation finally here? For months, liquidity has been incredibly concentrated in Bitcoin as it battled its way up to that $78,000 level. But with Bitcoin now holding steady and all these massive structural catalysts firing off at once, the conditions are absolutely ripe for a shift. If we see a major surge in volume for XRP resulting from that Rakuten 44 million user launch, history tells us that liquidity won't just stay parked in one asset. It acts like a catalyst. It triggers a broader rally, specifically targeting the sectors that are building the actual plumbing of this new financial system. We're looking at high-utility infrastructure assets here. You've got XRP providing the retail liquidity buffer, Ondo building the regulatory bridges for real-world assets, and Link connecting off-chain data to on-chain realities. The market is telling us loudly and clearly that the purely speculative phase is fading out, and the integration phase has well and truly begun. So I'll leave you with this final thought. As literally trillions of dollars prepare to move on-chain, are you spending your time tracking the daily noise, or are you paying attention to who's building the plumbing? Thank you so much for joining me on today's Explainer, and I will catch you next time as we continue to map out this fascinating market.